Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, December 10th, 2024. It's 9:37 a.m. as I'm starting the video, so we're just kicked off the trading day. I've got to step away from my desk here shortly just to do one errand outside today. I'll be back before lunchtime. And just wanted to kind of recap what I just sent out to you today. This is the S&P 500. I shared a couple trade ideas, trade setups, including the VIX, which was also covered in yesterday's video. That is poised to, but has not broken out of a bullish falling wedge. Remember, the VIX will typically be the S&P 500 upside down, a lot like I look at treasury bonds and treasury yields. Those charts are always inverse one another. The VIX tends to move opposite the S&P 500, and it is based on the S&P. That's why I followed up with these charts on ES, which we're looking at here, the future. So you have this pretty well-defined uptrend line. We're flirting up with it right now, and we get a breakdown, and that should trigger some selling. And again, this is what, although I primarily focus on and trade the NASDAQ 100, you want to see this one go for sure to increase the odds on that VIX trade playing out. So that's what ES looks like, the futures. I just gave you those charts, so you should already have those. I'm going to tweak this a little bit. We can do that here. You have a trend line coming off the early November lows right there. We're starting to crack it, but let's just give it the benefit of the doubt. Come in a little lower on these candles. You can see I had a couple violations before, so it's basically what I just got out to you. For all intents and purposes, we're on that trend line now, and my guess, just based on the look of it, by the time I probably the ink dries on this video, meaning that it's uploaded and processed on YouTube and I get out to you, will probably have broken down. So that's why I made a point to get the charts out to you today. And if not, that's it. Trade setup is just that, a setup untriggered, pending or waiting for a buy or sell signal, in this case a sell signal. And sometimes you don't get those. Right before I left town, and a week before, I've been highlighting this trend line on uptrend line off the August 5th lows on NASDAQ 100, and all we do was kept hitting it and bounced, and each of these divergences gave us a little correction, and ultimately, when we take that out, that should open the door to more selling. So those are the levels to watch. And in this video, I should have probably started with that. I wanted to get out to you a couple trade ideas I just received at the open, a price alert on ITB. ITB is the Homebuilders iShares Dow Jones U.S. Home Construction Index ETF. There's two that I follow. I follow XHB and ITB. ITB, I believe, is a little more concentrated on the builders, a little higher weighting than XHB. Now, they both have stocks that are not home builders. In fact, a lot of stocks that are not home builders. Anything related to home construction. For example, Home Depot, Lowe's are in there. Sherwin-Williams, which is a big paint company. Fastenal, they sell fastener screws and hardware and stuff like that. So you'll find those type of companies in there. So just know that, to the best of my knowledge, if you want to only go long or short the home builders, to the best of my knowledge, there's not an ETF that focuses only on home builders. You're going to have the home building related stocks in there. However, we're going to go through that in this video. I'll give you trade ideas. So XHB, what I have here, a little bit of a busy chart. Hopefully you can make it out in the video. I have this line right here that I'm highlighting is what I call my BOD line. This was my initial trend line. It meshes up with the trend line on ITB, which comes off the November 2023 lows. Several reactions recently, but with a couple brief violations as you zoom in here. So when I have that, two levels, if I can draw two trend lines or two horizontal support levels in close proximity, then I wait for the lower of the two to break. I call that the BOD, or benefit of the doubt trend line. So that's it. So you're right there on XHB, although ITB has taken out. I don't have a BOD trend line, and that's a sell signal I got today, so I wanted to share that with you. Just below that, I'm going to turn off all the lines here. You can see the 200-day moving averages, which often in so many stocks and sectors define trends. Bullish when you're above it, like you were here. Once you took them out, we were in a bear market in the home builders back here. We recovered both the 200 simple and exponential, my red and blue lines, tested them there. Slight undercut, that's normal. Perfect test right there, and there they are. So those are the things to watch. And so the takeaway, when I see something like this, you have a nice clean trend line that could do the trick. probably do the trick. But with the key moving averages just below in close proximity, that's not a lot of meat on the bone. The buyers may or may not step in there again. And again, so to put the odds in your favor, you want to see XHB take out the benefit of the doubt trend line I just showed you. You want to see the 200s go. Now, one strategy when you see this, if you believe they're going to go, you take a starter position here, maybe a third, no more than a half. Add when those next levels go. You have price support around 111.90, the 200-day moving averages, and if ITB gets there, XHB will certainly have taken out that BOD trend line. So let's just run through a few of the components here. As I like to say, an index or a sector is simply a sum of its parts. In some cases, it's a weighted sum of its parts, like the cap-weighted S&P 500, NASDAQ 100. So in other words, you give a higher weighting to the top components. As always in these videos, I have a watch list of all the components to the right, which I sort by market cap. So you can see right here, if you can't, that's HD Home Depot at 428 billion. And I'm going to go over the components here. Not each and every one, but I do this because, sometimes you can get a false signal, if you will, on a sector ETF breaking out or breaking down, where at that same point in time, the majority, especially the top components, might be all holding or testing support or resistance. And so in that case, I'll hold off and wait to see some of the big components break down to increase the odds that the sector is going to give way. All right, so there's Home Depot. All I can tell you is it's not, I don't have the divergent highs marked, but this was you can see similar setups, right? That was a divergent low right there, followed by a rally, set up both a divergent high right there, and then a breakdown back test. That's a rising wedge and a drop. You had a bullish falling wedge right there with positive divergence. So basically, you can see all these turns right here are clearly marked: divergent low, rally, divergent high, drop, divergent low, rally, divergent high right here. You can see the divergence lines below, drop, divergent low, rally. It is sometimes that simple. It's not 100%. I always say divergences aren't buy and sell signals. In this case, I might not have had that marked up, but you would have had a trend line right here and given you a falling wedge pattern, and there was your breakout candle, your buy signal. And so Home Depot, the way I have this line drawn at least, it's still a little bit above that. So once that uptrend line goes, and you do have an important reaction high here. You had an all-time high or multi-year or all-time. I'd have to go back further. I believe all-time high. Pulled back, tested again, rejected. And so this was the breakout candle right here. So what we've been doing is it broke out, but there's been no follow-through buyers. As I mentioned, volume on the indexes is almost non-existent right now. It's dropped down to multi-year low levels. More so than previous holidays. I didn't address that yesterday when I covered my low volume indicator, but I did look at that. We're below where we were in previous periods between Thanksgiving and Christmas, which are usually low volume to begin with. All right, so then you have this whole cluster of candles up here, potentially an island cluster top. If we gap down, we'll see. All I can tell you is that's support about 419.73 and then the uptrend line. All right, I won't spend as much time on each and every one. There's lows. Similar, you had an uptrend line there that was broken. It's kind of below that high. There's Sherwin-Williams. There's a clear uptrend line, starts right there. Lots of nice clean reactions breaking down today. Okay, and that's one of the big components there as well. So there's a sell signal. If you're interested in any of these individual names, let me know and I'll sharpen my pencil, meaning I haven't updated this chart since this trend line right here, which is roughly the first target. That goes back to, I created that line back in March. So if you want, and you might also target, another pullback to the 200 days, even if you're longer term bullish, just looking for, these overbought conditions to get worked off. But if you look at the scope of the divergences, that's why I do these videos. This is larger. I was about to say comparable, actually bigger divergences spanning over a longer period of time than this divergent high right here. And that was a beautiful, well-defined wedge. With a nice clean sell signal, that red candle there. Let me tighten up the trend line like it should be. Let me move that one out of the way. There it is. There's your red breakdown candle, which would have been an objective short entry. And that stock fell 18%. That's what swing traders try to do. If you can capture any of all of that 18% move, even half of it, you get 9% there, you get half of that move. Obviously, the goal is to get most of it. Anywho, so my point being from the breakdown there, you can see I have a target down here. There's also a gap a little bit above there. They might step in and buy. And so that would be what I think, based on the scope of the pattern, a minimum target, and that's about a 13% drop. Again, a minimum target. There's a longer term uptrend line right here that comes into play that's going to be likely to be hit, in my opinion, as well, especially because we'll have given up the 200. So I would say probably 20% plus upside on this trade if the sector breaks down. We see those ETFs clearly put those BOD and all the trend lines in the rearview mirror, and Home Depot and Lowe's roll over and give us some decent evidence, sell signals and or evidence of a trend reversal. There's DHI, which is DR Horton. Again, this one, like many, kind of riding up, pulling back to the 200s. It's been flirting with the 200s here for a while. And if it can clearly start to move away from there, then that indicates a trend change is likely happened, and we're going to start a new correction. That's also a divergent high there. If it punches through soon, you might have a little divergent low. Again, I'm just trying to give you an overview here. Lennar, another big builder. This right here is an not an ascending. This is a regular broadening wedge pattern, aka megaphone pattern. You've got your nice 3 clean reactions up there, a couple reactions there, and you have a price support level here and the 200 days. Once again, a lot of these stocks, they've been buying the 200s, and so if you see this week next, unfortunately it is the holiday season, so trading volumes are low, whipsaws are have an increased chance, but that doesn't mean that breakdowns can't occur. Typically, as I said yesterday, it's seasonality is bullish right now, but there are certainly periods where some of the biggest drops in the market come during bullish seasonality periods. Remember, stocks go up most of the time, the vast majority of the time, but the corrections, when they come, can be very swift and typically put more money in your pocket in short order than bull runs, because stocks tend to fall faster than they rise. So that's it. So we'll see. You can see the 200. We're in a bull trend. You're above the 200s. You buy pullbacks to the 200s and or brief, recoveries. And if you want to wait, when you see if you're bullish and let's say you undercut the 200s, just wait for the recovery back above. That's your bull signal to get back in. And then once the 200s are taken out like they are, you're in a bear trend and you short rallies back to the 200s. You keep doing that until the 200s are regained. Then you're in a bull trend, and I'm trying to do my arrow tool. If I can click on it successfully, I always have a problem with that. And that's it. So here we are, and it's these divergences that say, no trend lasts forever. By the way, there was bigger divergence that I didn't have marked. I see it right now. There it is. There's your divergence. So that same upper line for the broadening wedge pattern is also big negative divergence, which indicates home builders are going down. All right, I could do it all day long. You're going to see the same thing. The vast majority of these have divergent highs, most recent divergent highs. So, and it may just be another correction in an ongoing bull market, which, you can profit on, or based on what I haven't done here, but I do it all the time on the equity markets. When I go out to the longer term charts, you have a setup for a much larger trend reversal. This is Home Depot. I'm just marking it up live. I have different boards. In fact, here, that's not my main board. There's my main board. Let's just go back. It's a little busy. Let's go back to the one here. So that's what you see, a big divergent high. Last time you saw it on the weekly like this, you had some divergence here on the RSI and what I call an ADH, almost divergent high there. You had a very steep uptrend with a well-defined uptrend line, and that was back in the late 90s. Home Depot dropped 72%. Back here, doesn't look like much, but you started diverging up into the Great Recession, the 2000, and actually Home Depot peaked a little earlier. If you recall, the housing market actually topped in 06. And what happened is it didn't crash right away. Prices flattened out, same thing, which, by the way, I haven't done it in this video. I actively monitor Redfin, Zillow, looking at some of the hot markets in the U.S., and I encourage you to do the same. We're seeing the same thing. Prices, I look at Miami a lot. I'm from Miami initially, grew up there, born, raised. But it is a major market, and it's been one of the hottest markets, and I've seen the same thing. Prices aren't yet really dropping, but they have most certainly flattened out. Very similar to what happened in 2006. And they went sideways for a year. Days on market started going up. Price drops started going up. People tend to not want to drop their price. They think in their head, because they saw their Z estimate at 800,000, that's what they're going to get for their house, come hell or high water. And you're seeing listings that are rolling now in quite a few markets that are going on over a year. I'm even seeing stale listings being pulled off and put back on. That's a little sleight of hand. Realtors will advise. I know I went through this when COVID hit. Got to pull your house off the market for, I think it was 60 days, if I recall, on MLS before putting it back on. Otherwise, it'll stay on as an old listing, and stale listings are hard to move. Anywho, there's a primary uptrend line, guys. So this is what I'm getting at. This is Home Depot, and this is a weekly chart. So, even a correction back, it's got to drop 19% to get there. But this is you look at the history of this, and this is just one mega supersized bull market, a la the central banks and excessive and prolonged easy money policies and quantitative easing that all started right here in the financial crisis. So the bigger they rise, the harder they fall. And you don't have anything to worry about right now as far as having evidence to declare a new secular bear market has started. But when these trend lines, and I have comparable trend lines on the stock market, S&P, everything else, when they go, we're probably looking at a multi-year, possibly up to a decade-long plus secular bear market. But first things first, that's these 60-minute charts. Okay, so back to the dailies. And when I say first things first, I'm talking about those sell signals on the trend lines that I've been watching on the daily and 60-minute charts, the trend lines off the August 5th lows on the stock market and the major indexes. All right, so I could go through more of them, but you're going to see, like I said, you're going to see the same thing. You have a lot of them have well-defined trend lines off the lows, and this is PHM, Pulte, another big home builder. And by the way, this divergence really has grown from this point. This is one very large, big divergent high. Pulte is starting to crack by any measure. If I even pull this trend line down to capture those lows, BOD, which is probably the best fit, this one's cracked. And now you can see just below it, you have the 200-day moving averages. So Homebuilders, that's it. Sharing that as a trade setup, a sector I think is on the verge of breaking down. Like I said, we're starting to get some evidence today. Some of these stocks have already broken down. And again, I think at most right now, it's definitely not an all-in moment, because a lot of the big ones are above their 200s, although not very far above them. So at most, for maybe a more aggressive, anyone wants to engage a sector, a starter position, fractional, quarter, 1/3, no more than a half. It's seasonality thing, and again, we need a little more evidence. Oh, and of course, this sector. You'd also want to see the S&P 500 and NASDAQ 100 break down those levels I gave you today. And then that would be, let's say you get those sell signals on SPY and NQ and QQQ, then you can increase your, from a quarter to a half up to maybe 2/3 position in these guys. Most people don't want to short at a market like this. Shorts have given up. I can tell by looking at short interest on stocks, things I monitor, put to call ratios, AI bull bear sentiment surveys, and just basically the trend in the charts, and the fact that volume's very low. So it shows you we're drifting up on fumes, meaning there's not a lot of short sellers in there. It's just a little bit of buying will continue the drift. All right, let's end it here. You can see I could go all day long. You're going to see the same. I'm going to pull that trend line and tweak it a little bit. So a lot of these are right there, ready to go. And anyways, that's why I wanted to get it out to you. If you are interested, this is a chart I haven't marked up in a while. I'm just marking levels. This is what I do. It's very hard for me to look at a chart and not start identifying key levels. But that trend line's really nice and clean. Look at that trend line comes off the April 2023 lows. You almost hit it there, hit it there, hit it there, hit a lot of reactions here, ready to go. Got a little minor support there, but minimum another pullback to the 200s. Even if you're longer term bullish, I think you might agree that we're going to drop here. And if you do, let's just try to quantify it for you. How much could you make on this? I've got a little error channel right here that got put on there by accident. Need to delete that. That would be a drop of about, it's double digit, good 13% just to visit the 200s. And this one hasn't visited the 200s in ages. So there it is. All right, let me wrap it up here. Oh, no, my bad. Let's look at a couple others. Yesterday I had on notes, there were a few other sectors I just wanted to update with you. XBI, shared that with you back, oh God, when did I give you this? Back in September, late September. And I gave you these targets. XBI told you had this trading range we'd been in with a couple false breaks below and a couple false breaks above, and I'm betting this one down. And gave you targets here. Most recently, put in this divergent high. Then we had a breakdown of this trend line here, right? These are the biotechs, of course. Breakdown, back test 1, back test 2, hard rejection down to my first target, which again was laid out back on September 24th. Bounce, and then I had again this trend line I created back on November 1st, and so we bounced this one right here. Bounce back to that. So far rejected, but not a hard rejection. T1's already been hit, which means if we move down, it increases the odds we may go through it. We could certainly get another reaction, and once we do, that opens the door to T2 and T3, and we'll have clearly failed the breakout above this range here that we had here, which from my experience, usually once you have a failed breakout of a range, just like you did down here, break down to the downside, here and here, your next stop once the range is re-entered is the other side of the range. So that's why my T4 is right there, and we had two major reaction lows there, and that's my T5 level. So there's your update on XBI. And the other one is EATZ. I had, while I was out on vacation, just actually right around the time, right before I got back and right after, I had a couple of the restaurant stocks give me sell signals. This was a trade idea I shared with you as well before I left. Restaurant stock ETF. EATZ, and then in there I had names like McDonald's, which there was that bullish wedge that already broke down. I covered that back then. CMG yet to break down, but poised to with that divergent high, still off its all-time high right there. Yum, QSR, which one? I think coming up, Texas Roadhouse, I know was the one I had an alert on. I'm going to get to that in a second. I just wanted to mention these are, I still very much like this sector. Everything's just, the market's holding up, so these sectors aren't going to really start moving impulsively until the market breaks down. And that might be till after the first of the year. I don't know. All I can tell you is the levels that will likely trigger it, the where, but not the when. The when is the harder part. Okay, so the where on this one, well, DRI needs to break this trend line right here. Gives you this little wedge right here. It looks just like this, almost identical to that. Then you had this one here, similar to that. And there's your sell signal there. We hit T4, we bounced. There was another sell signal, went down, divergent low. So this one's just bounced around in this range, and with a very almost identical, very similar technical posture these two other times. So we've already started to roll off the top of the range, and so this one should bring us down back to the minimum, the bottom of the range. That one hasn't broken down yet. That one's Canadian. Kava just gave me a sell signal. I did have an alert on that. You can see yesterday, you can see the breakdown there below that uptrend line. And so that one's an objective short there. Texas Roadhouse, I know I had an alert on this one. There goes my lines right there. That one's below the uptrend line, rising wedge pattern. And maybe, there's a couple minor supports here, but I think we'll come back down to at least that 174-ish area, which is this trading range right here. We had a breakout, some consolidation on the top of it. So that gives this one another, before it gets there to that minimum target, about another 10% drop. So as you can see, there's some that haven't broken down, so it's not a hard all-in on this sector. Wingstop did. I gave you this one there. It broke below there, back tested. So, and it's below. This is an example one that's already rolled over and offers right now an objective short entry for two reasons. Number one, that's a very well-defined trading range right here. Top and range. We gap down violently down below it, big gap down. And turn off the lines, you can also see the 200-day moving averages. So you have dual resistance. It's trading, and it got well below. That didn't just kind of peak a little bit below the 200s. It gapped below, and every attempt to get back above the 200s, at least the 200 simple or exponential, the red line has been rejected. So that one's pretty simple. And there's a gap right there. You really wouldn't want to see it go much above that gap, because then you've taken back the 200s. And so it's a short anywhere from pretty much here up to about that 200-day moving averages. average line, not above it, and somewhere above there you'd want to consider stopping out if it gets much above there. PPO is in bearish territory as well, trading well below the zero line. So that's it. And okay, I'll update this sector later. And bottom line is there are some sectors that are starting to, give you some sell signals. Nothing screaming right now, and nor would I get too aggressively short. And there's still plenty of longs on the site that look good. We have a lot of bottoming plays, some hitting targets recently. I think it's still a good time to run a long short hedge portfolio and not get too aggressive on the shorts until the indexes break down. Again, that could happen before the new year, or it could happen afterwards. We're right on the lines right now. We're very close, and that's it. Let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.